Peter McGuire, welcome back to a more casual XM.com presentation covering the key signals that matter. On screen, I'm going to show you 4 graphs today. I want a brief, succinct comment, Pete, but I want you to adapt. I want you to tailor your commentary, knowing, and as we all know, that the global news cycle is dominated by 2 meetings. One was the G20, and now we have COP26, where the global leaders are talking about the future of our world as it relates to their various policies. Pete, welcome, and let's get straight into it. What's happening, what's not, and what are the key signals that matter right now?
Well, good morning, Will. Good to see you. And whilst we look at this graph, and there's a classic story as far as underinvestment and what we've noticed during the last, say, 2 to 5 years from big energy companies and the mandate put forward by government, and many of the large companies have noted that they have not spent Capex or capital expenditure on new fields, new technologies, innovations, and so on. And what we've seen, naturally, is an underinvestment across that sector. So there's the story, and that really is a realization, and what we're experiencing now, Will, at $85, $86, $87 a barrel, and talk that we're going to 100 to 121 is a real wake-up call across inflation. That's US dollars, of course. Inflation and the energy crises that may very much present itself to the Western world and to emerging economies from now over the next, say, 6 months.
Well, let's talk briefly about that. There are plenty that would say that renewables are the answer to that particular problem. I think that's part of the answer. The key issue that you're calling out here is the chronic underinvestment in these industries to ensure that they are clean, green, and efficient, and transition in such a way that is pragmatic and probable from the point of view of guarantee of supply.
Yeah, very much so, and that tells the storyline very, very well. And it just tells the storyline very well, and that's been demonstrated via the huge volatility we've seen in energy prices over the last 12 to 18 months, Will.
Now, we all know that all markets are, and certainly pricing around markets, are governed by supply and demand. On screen now, I have a chart where the OPEC situation. You know, we've got an oil production in the dark blue there. We've got a WTI oil price in the gold or the yellow. Headline here is OPEC's bringing back supply very slowly. The suggestion is that there's no rush for producers.
No, exactly right. We've got a meeting, by the way, tomorrow, and that was the main focus of our discussion today. That meeting for OPEC and OPEC Plus. The question is, will the cartel sit back, Will? And if they do sit back and enjoy higher revenues, then what is the issue going to be as far as adding more production to that big storyline? Now, it's a disjointed cartel, as we know. We've got issues as far as production coming out of the likes of Libya and Iran. There's even issues with Angola. I spoke to a colleague last night on a global chat in Venezuela. So all of these large producers, they've got issues trying to manage their production moving forward. And then you've got the monsters, the elephants, Saudi Arabia and Russia, and what the story's coming from there. So I feel as though that they're all in some ways rubbing their hands with glee as the price spikes, and many people are saying that we're nowhere near the high point. So that creates the inflationary spike and a lot of other concerns affecting all central bankers.
Pete, on the inflation point, next chart we're looking at today again is oil driving US inflation expectations. Plenty of news around the market on this subject. We're talking about the oil pricing here, as we've been talking about just now. Crucial as we think about the velocity of these global rate increases.
Yeah, you're dead on, Will. I mean, we've spoken offline, we've spoken online over the last 12 months regarding that inflation story together. It's a common theme that I'm questioned most days with international media companies, that you go on and you talk about the inflation story and transitory and Yellen's comments as far as is it going to last until the end of 22. So we can see what's happening there. That tells the story as far as oil price. also tells the story what the inflation expectations are. But the true essence is, I'm not sure where central bankers shop, but the shops I shop and the shops that my network shops at, being kids and family members and friends and your good self, everything has got a rocket ship behind it as far as cost. So that really impacts the strength of the wallet, strength of the purse, and there's a war for talent at the moment. Everyone's looking for more staff, and everyone's got to increase the pay packet to manage these issues leading forward with higher inflation.
And that's a fair call, Pete. I mean, there's plenty of headlines around the world. The great resignation, the big poach, as we should be talking about it.
Absolutely.
And the call for talent is certainly there. And the question becomes, well, is there talent? If you want the money, have you got the talent? Can you deliver value? And if you can't deliver the value, don't ask for the money.
Well, yes. Yeah. Well, that again comes down to sector specific and skill set specific. But yes, I do agree with you in that regard. All right. It's no easy task. Owning a business under current circumstances is not easy. Some have, flourished over the last 18 months, and others have been hemorrhaged, and there is no business.
Mate, and look, there are a lot of people out there who, look, they really need to, sit back, reset, and and pragmatically reconsider what's next. Absolutely, and for many, it's been a very tough period. Absolutely,
and I think, in essence, this last 18 months, Will, and we spoke about this going back to early last year, the time to re-educate, the time to get engaged, the time to take on knowledge. It's all about what you bring to any argument, and with the more knowledge, creates more opportunity. I remember when I did my MBA, one of the fellow students, I so succinctly put, he had a low emotional intelligence, but he was highly intelligent. And he said to the class, what does the MBA offer? And this is going back, nearly 20 years ago. And he said, it allows me to say no to more things. And that's so matter of fact when you think through the framework as far as education. So, it's go and study, go and take on information, go and take on knowledge. And that's what we try and do together here, Will. We're not looking for medals. We're looking to just share what's the storyline is with these particular charts, the story behind what the graph represents, what inflation is. And we're not here to grade anyone to get a credit average or a distinction average.
Hey, Pete,
we're here to give them knowledge.
I'm going to break in there now, mate, and wrap it up because we've run 6 or 7 minutes. We don't want to keep everybody here too long, but 30 seconds on this last chart. We've got the pound and the dollar.
You can see it from there, Will. We've had a tremendous move, volatility over that last 8 months from October to February. And what that demonstrates, big moves, violent moves, and where it goes from here with that US dollar. We've seen a lot of, and this is a classic across most of the currencies, have offered this sort of dynamic price ranges. So all it is, look at your charts, look at your trade signals, and they don't sleep 24 hours a day, Will.
All right, we might come back to this chart again. I don't think we've done it justice today, but I reckon there's more in this chart than we can draw out in the time we have, Pete. But thank you. We've covered inflation. We've looked at the prices. We've looked at what's behind potentially the big inflation story in the US, and it's energy price increase, base utility increase in price. It's the hit pocket that's being hit by everybody across the world today as we look at the chronic underinvestment by utilities and governments in the energy marketplace.
Absolutely.
Peter McGuire, talk to you.
Thank you, Will.